Okay, hi guys. Can you hear me loud and clear? G'day, Pete. Back from holidays, mate. Good to see. Sunshine Coast. Fantastic, mate. Hope you enjoyed yourself. Let's just wait till a few more people come in and we'll get started. You guys had a good weekend? Just got my eye on the spy at the moment. Oh, fantastic. All right, we'll worry about the late comers in a minute. Thanks very much for joining us, guys. For anyone that listens to this later on that's new, feel free to subscribe to us top left-hand corner at Twitter. Right is Facebook. We don't really, I'd say, that stick to Twitter at the moment. And the bottom right, subscribe to us at YouTube. So we'll, I've said it before, I guess, but we're going to get a bit active with what we're posting on YouTube. I'm going to start doing a couple of different videos just to maybe an end of week recap, review, positions, all that sort of stuff. So we'll get stuck into that. So it's worthwhile subscribing there. And just remember, we're only giving general advice for what we're talking about today and any other stream. It's just our opinions on the markets, nothing more, nothing less. No specific advice there. So hope we're ready to go. Today, it's been a bit of a choppy market. End of last week, was it the week? Last week, week before? A big sell-off. I think it was last week. We bounced back a bit, but I've taken a bit more of a risk-adverse stance to this overall market. We've traded the all-time highs, pretty much got through the all-time highs, which we're waiting for quite a while now. Was it 68.51 and a half, somewhere around there. G'day, Paul. Then backed off straight away. So not really a positive sign. I thought we were gunning for that level, but now it's really just, I would like to have seen a more of a controlled move off that high, build a higher level, consolidate, and then I would have expected a potential push up through. But the problem is the US is starting to crack. I think they're showing a few cracks. Japan, the yuan, no, sorry, Japan, China. It's not getting better. I think it's going to get worse before it gets better. The trade wars, that's going to kick off a bit more. G'day, Laurent. So I think there's quite a few factors, and sooner or later, after a while, people are going to get, you're getting a bit tired of trying to jump in, getting squeezed out, jump in, getting squeezed out. We've had that over the last few months. It's just been a tougher market, tougher if you're more trend following. If your style is just trend following, just getting those ones that are you're going to get a bit of momentum, they're just running out of steam. There's not too much I'm seeing around at the moment that's ready to jump in. They are quite high. I've just probably putting a bit of a bias to the downside on the overall market, so it's hard to take on risk when one, you're just not seeing any sort of worthwhile trades, and two, you're just seeing the risk to the downside in the overall markets. But we'll go through the ASX in a minute. Let me just, now I'm going to get rid of that now. Is that what I want? There you go. And transition, there we go. So we'll go over, actually that's not what I wanted, was it? Go over here. Just take a look at the overall markets at the moment, and then we'll get into it. So I just want to talk about, I think it's worthwhile anyway. Whether I'm right or wrong, another story. But it's worth, you've really got to take a bit of a view of what's happening, keep an eye on the XJO. This is the XJO at the moment. That's not what I wanted. Where have I got that? Let me just get rid of that momentum. I was playing around with something the other day. Where is it? There we go. So that's what I was saying. This is the all-time high, and if we go right back to a monthly, we had that big push up, being dragging our feet a bit, unlike other markets. So you got the DAX, the FTSE, they all trade in the all-time highs a while ago. The US has been all-time highs for a long time now. Absolutely smashed it. We got in there a week or so ago. What was it? On the 30th, end of the month, end of the financial year. pretty much, well, nearly the end of the financial year, 1 day prior, and then tipped over since. So just looking, starting at the monthly, that was well extended on the monthly. You expect some sort of heat to come out. So yeah, just looking at that chart, looking at the ASX on the monthly, we could easily pull back, hold a high low, and off we go again. Nothing wrong with that. But the problem is a pullback on the monthly is going to be quite large. It's just we have to see what sort of happens from there. On the weekly, just banged off the MAs there at 65 or just below 6,500. So reason to suggest that there's going to be some heat you would expect coming out of this leg. It's the first real correction we've had, and you'll only really see it on the daily when we took out this high low around 66.50. You can see this high low in here. That's what's holding the old trend up. That was sort of the only real, that was the anchor to this move up. So once we've broken that, you got to think of two things. Once you break anchors, if you can mark up your anchors, for a trend, for momentum, all that sort of thing. If you're marking up your anchors, what a break of that level suggests you're either going to go in consolidation, pretty much sideways movements, or there's going to be some heat coming out of the market. You're going to go into some sort of contraction, or contraction in an uptrend means lower lows, lower highs. And this move down, you can see the first few days of that pullback from the highs. Yeah, that's okay. We're relatively contained. Then bang, bang, a couple of big days on the downside after the US collapsed. Got smashed a bit, and we're just bouncing off those lows now. So again, we've spoken about this quite a few times. It's what are we going to get something like this type of price action? We got slammed down here, we got slammed down here. So this is the same sort of price action in essence. This red candle, change of trend up here. That was gradually higher highs, higher lows, change of dynamics just towards the end, and then a sell-off, couple of green weeks, bang, we got a big sell-off. That's more what I'm concerned about than anything else. I'm always looking for down legs to happen in two movements. I'm not expecting. I just would not expect a sell-off like that and bang straight back up, because I think the US is overcooked. Lowering rates, you don't cut rates. You're cutting rates in Australia, cutting rates in Europe, US. Not a good thing. Growth is stretched. Problems with debt in massive problems. I think I sent around an article. Half of it I didn't understand, but I got the general gist that the yuan, that's a problem. We saw the cracks appear when they let the yuan devalue below 7 to the US, and they pegged it again, but it just showed you the market was tentative on that. That become news, and that become a reason for a sudden sell-off, sudden spike lower, and they've come back and pegged it, and the market's going, oh, okay, a bit of relief coming in there. The more I read about it, the more I see the yuan, they could peg it to the US dollar, so they're going to be buying US dollars, all right? Or selling US dollars, selling US dollars to keep pressuring that US dollar to try to peg it. Now, there's all these thoughts that they just haven't got the US dollars to sell. Now, if that's the case, there's going to be a revaluation of the yuan, which means a revaluation of the US dollar. The US want the dollar lower. Problem is, if revaluation, it's probably going to be up on the US dollar. And so that's going to put pressure on the US, which you would expect. They want lower rates. They want a weaker dollar for exports. And if it doesn't happen, that's going to put some serious pressure on, I think, over there. And then that's where you might get that second sort of leg lower in the US, a big sell-off, a big correction. Now, we do need heat to come out of the market. There's no doubt about that, especially in the US. It needs to reset itself. Even with our trend up from the start of the year, we need to reset ourselves. And maybe that's what we're seeing at the moment. A bit of a global reset. Not a bad thing. It's just, obviously the question is how much is going to, g'day Casey, how much is going to reset? Are we going to see a big sell-off? Just a fear-driven sell-off? Now, fear-driven sell-offs, anyone that's lived through one, I remember the GFC, it doesn't matter what you got, it doesn't matter the fundamentals, anything. When it's fear, bang, people want out. They just want get back on the sidelines and forget about it. Could be well undervalued stocks, could be indices that are well oversold, they just keep going down. Currencies, all that sort of thing. So if it's a fear-driven market, there's going to be a few issues, and then that could see some deeper corrections of what we probably would expect. But if we start seeing, let me just get this up here, more of a controlled move down, that'd be great. So ideally, that's the uptrend. When we break an anchor like that, you don't know whether, I mean, there's a few things, whoops, a few things we'd be looking for from here. So this is the uptrend. We've broken that. Okay, where to from here? I would never expect it, straight into new highs from there. I just don't think it's not, well, it's not really viable. It's not impossible, of course, but it's going to take some real push because people are either getting out, turning bearish, or maybe just waiting to see what happens before they potentially close out, take some risk off the table. So when you sort of get these breaks of anchors and then you get a move back up, it could be if it starts to stall, then you start getting that a secondary wave of selling. So I'm always more looking for, if we get this kind of price action like we've seen before, and then it starts getting a bit overbought here, then I'll be looking for another sell-off, that secondary leg lower. And by that secondary leg, I'm sort of measuring this initial leg lower and potential secondary leg lower. So you just to see where it goes, and that could be a bit more control. We might get a major sell-off there. It's all about what's going to happen. I mean, I'm always looking for that second move lower. It's what's going to happen on that second move lower. Once we've broken it, and that's the key thing, is breaking that anchor to the uptrend. Of course, we could just pretty much, if we can do it a different color, pretty much from here, whoops, we could just rally and consolidate, really between a bit of a range through here, and then start to pick a direction from there and then see if we can push up, or whether we push down out of that range. And that range could take, if we're looking at a weekly chart or a daily chart, could take quite a while. So I think there's some issues that are going to be sorted out, obviously. And people are looking at, we got a bit complacent with the trade war, which we know that. The trade war, we expecting it to get sorted out. And then, of course, Trump comes out and tweets, he just wants to lower the US dollar. I think that's what he's trying to bully the Fed into pushing rates or cutting rates to push that US dollar down. Now, if they don't need it, they don't need it. They'll be pushing back. So, well, inflation's it's not slowing as quick as what we thought. Maybe one rate cut's enough. They're not all it's not a unanimous decision to cut rates. There's a few there that, okay, maybe we need one cut. There's a few there that voted against that, the most recent cut in the US as well. So it's not a consensus view that we definitely need to cut rates. And if he's trying to bully the Fed into it, and they're meant to be, I wouldn't say that word, I forget the word, not autonomous, but independent to the US government, then they've got to continue to look at their facts and figures or their data that's coming out. Like I said, some of the data that's coming out is better than expected. So maybe this contraction is not quite as severe. Maybe that heat coming out of the market, the global or the economy is enough. We need one rate rise, and we'll assess from there. Now, the only real reason it's getting into a few issues is because, well, this is my view anyway, is tariffs. Tariffs is really constraining growth. So we're just going to keep bumping up tariffs. Yeah, it's going to keep constraining growth further, and potentially down the track, another rate rise could be on the cards. Or, so there's those two views, whether these a rate rise to start up a cycle lower, or whether it's just that preemptive to try to loosen up cash flow, buoy inflation, all that sort of thing, just to keep the economy ticking along nicely. So yeah, I think there's a few things to get through. Obviously, that trade war is not going to come to an end soon, and I would see that escalating before it finishes in the near term, which is going to cause, with the market sitting where it is now, not long ago, they could talk about trade wars and tariffs and things. You get a bit of a sell-off, but the general trend was up. Now, the trend, it looks like we're getting a few cracks. Like here, this is obviously on the ASX. Let's just go to, where's my major markets? Here we go. The S&P. It looks a bit different. We've got that big, what are we on? That's a daily. On the weekly, this is more of a pullback, and we just have to see how that goes. Whether it pops back up, we build a lower high. If we get a key lower high, I would expect not something like this, but more heat to come out of the market. At the moment, the anchor to this uptrend is down here around that 2750. So we're above the anchor. We haven't broken the anchor to the downtrend. Sorry, to that uptrend on the weekly. Daily, yeah, pretty much we broke that. Well, what was that back on? Oh no, sorry, we broke that back on the 31st, end of the financial year again, 31st of July. Big sell-off. So you can just see that if it's starting to roll over, you need this sort of sweep out, clean out some longs, some buys, put them back on the sidelines, and then potentially do what we did back here, reset, start to go up again, take out the highs, maybe up to 30, 3100, roll over, clean them out. Just that process sort of gets that move up. It gets a bit extended, clean them out. A bit extended, clean them out. It's just whether that's the process we're looking at the moment, or whether there's going to be some sort of big correction. All we can do is really wait and see and just assess the action as we go. It's more. I think our market's more just hinged on what the macro environment is, as opposed to um, anything else we're doing and reading about it. Of course, you got to remember too. I guess I'm being a bit bearish at the moment. Things I read is making me a bit bearish, but you got to remember that I'm firmly planted on what's happening on these charts, as opposed to what news is coming out. Because it's really sometimes when the market turns bearish, all the news flow that comes out is bearish. When it's bullish, most of the news flow that comes out is bullish. You got these tailwinds, obviously, of the bears trying to spruik their position. But pretty much most things you read are going to be bearish in the newspapers and the news, all that sort of stuff, when the market starts collapsing, because it's just good news. It's got nothing to do with the market as such. It's just good news. They're just pumping out news to scare you, to get you to read things, pay for things, whatever it is. So very easy to be bearish when the market is heading south and everything you're reading is bearish. But it doesn't mean it's the correct view. It's exactly what's happening. So I think you can't hide it in the charts. You can't hide it in price action, because that's a consensus view. It's not just my view. It's not just your view. It's not just other people's views. It's pretty much the consensus of what's happening and where we want to be. I might want to be on the sidelines. I'm on the sidelines. I'm staying on the sidelines. So that's my views. It's coming into the market. Everyone else might be bullish on it. There might be a lot more bears. So it's just that weight of consensus to which way it's going to go. And that's what you can't hide when you're in the market. You're either in, you're out, you're on the sidelines. For now, that's pretty much, or you're looking to get in, obviously, but all those positions you can factor in there, whereas news won't really look at that. So it's just, I think, just keeping an eye on what's happening in the market, what is pushing it down. What happened on that sell-off? What drove it down there? Okay, trade wars, Trump whacking up tariffs, Trump wanting to get the US dollar down. They're not doing China wars. China maybe don't have as much power as obviously what we think. China, I think, when Trump actually came out and said, was it on Friday night, which drove the market down? It did bounce, which was good, but it drove the market down because he was talking about he doesn't see a deal being done soon in the near term, and he's not willing to. The US is not willing to do any business with Huawei, so he's still trying to bully China and really putting the pressure on them. It's just, it'd be interesting to see how it goes, whether we crack or whether China cracks, what happens there. Obviously, they'll come and defend themselves. They'll talk it up as well. And just if it starts getting out of hand, I think that's going to bring in more volatility in the markets, and we might get a decent sell-off. But at the moment, I wouldn't be buying into a V-shaped recovery. I'd just be looking to see, especially, we're obviously trading our market, not so much the US, but I'll be keeping an eye on what's happening in the US there. That's a Dow. It's going to be the same thing. FTSE, correcting hard. They've still got Brexit issues to worry about. Data come out on Friday. They're contracting. It's been the first time in a long time they've shown the data, GDP and something else, industrial production or something, contracting. Not a good sign on the FTSE, and especially when they come into the Brexit, they're trying to negotiate that. Europe under problems. They got some problems too. So I'm seeing more bearish signs than anything else. And the US tend to be gun ho. They'll go up, when everyone else, and then stretch to the max, and then they could just turn around and drop like a stone. But we'll see how it all goes. So I don't know what everyone else's views on that is. Most people, just put, whether you're in the market, you're heavy load into the market, or you've got a lot of risk out of the market. How are you situated at the moment? We don't have any positions on. I've been seeing a few potential shorts pop up on overextended stocks, and that's the setups are more. They will come into play if this market starts to head south again. And if it doesn't, we won't go short. It's as simple as that. We'll be looking for buying opportunities, but until the market tells us otherwise, we're going to be tentative to put on buys, I'd expect, and potentially looking to hedge with some shorts, hedge the downside risk. I mean, if you're not in the market, it's easy to hedge. You can just stay in cash. But it's worthwhile looking at ways to make money on the downside too, because you don't know if it's going to be severe, it's going to be short term, or what's going to happen. So who's loaded up, who's not loaded up, who's holding off, who thinks this market's got more to move on the downside? What's the consensus on that? We bounced back all right today, actually. It's master bear today, yeah. Oh, a bit of a bear at the moment. I'm not saying that I wouldn't be happy to buy. Just keep an eye on. It's just macro view, pretty much this daily chart that I've got my eye on at the moment. If we can pull back and hold a higher low, say around 65 on the ASX, yeah, could be look to buy some, but really having more of a shorter term view. And if it keeps going, if they trend up, great. If they push up, run out of heat, or run out of steam, maybe taking some off. Yeah, idea is trying to get some exposure to the upside. If it looks like it's going to pop, that's great. I just don't see that with this. Look at this has been the trend up all year, pretty much from the end of last year, December, around Christmas time. There's no sudden move. This is the first time we really caned. So that's got to tell you something. One, it could just be a reaction to moving into new all-time highs, because everyone's sort of expecting, you pop the new all-time highs. Everyone's looking for that double top. So there's more bears sitting up there in waiting, I guess, than anything else. So that could be the reaction just to moving into all-time highs, and we're backing off from there, and couple that with a couple of big down days in the US. Or this could be the start of a move down off your all-time highs. We've broken this uptrend. So how much are we going to contract if this move up from January? And like I said, I'm looking for two moves. I wouldn't mind a bit of a grind up, roll over, see what happens on the second move down, and then reassess from there. Yeah, been bearish for a long time. I'll let some trades run. ASX. Yeah, so you've got some good solid shares there, Paul. Been up. It's good having gold exposure. I'm ashamed. I'm a bit upset with all not jumping into some goldies. Really just dropping the ball a bit, I guess there. Yeah. All right. That's good to see. It's just interesting to see. I mean, if we hold below these MAs, say we sell off here, we sort of pull back to the MAs on the daily. We'll just go back to the daily. Pull back to the MAs on the daily. We could just grind around here. If we grind around here, the longer we stay sort of below these MAs without some sort of movement, we chop around here, the more inclined I think we're going to have a bit of a sell-off. We could easily, like I said, do what we did back here. It was about September last year. Grind up a bit, and then if we get to sort of that overextended mark, then we could roll over. I mean, who knows? Or we could just, I would like to see to be that bullish price action, just to see. So we've come down here. Let's just draw that in red. This is the most recent move down. What I would like to see, we've pushed up. I'd like to see a bit more of an extended move up, and then see what happens when we come down, and see if we can hold that high low, and then chopping like that. If we can chop like that, get a bit of a squeeze, I think that would lead us to a good move up, because that would be more of a key high low, and a key high low would lead us to at least potentially retesting those highs, 68.50 zone. But if we sort of do this grind, minor high lows, higher highs, I'm not confident with that price action. That price action is just better to stay out and watch to see how it unfolds. Get ready for some longs, get ready for some shorts. Simple as that. So if this plays out, we'll be looking to the ASX for short opportunity. And the way you attack the downside is probably what we'll lead on to in a second. Or obviously this way you'd be looking to some stocks, looking to something that's had a bit of a clean out. You want a stock that's had a bit of a clean out. I wouldn't mind seeing something that had a bit of a correction. Oh God, that's a horrible looking chart, wasn't it? Something that's had a bit of a pullback, potentially holding the trend up and just starting to find some buying support, stepping in at higher lows, and then looking to buy into something like that if we do get this type of correction on the ASX. Buying into some stocks like that, you know where your risk is. Potentially your premise is that we're going to be gunning for the highs on the index, which would mean there's more pressure to the upside, potentially squeezing out those. Thanks, Paul. I'm going to put my finger painting on there too now. That's giving me the giggles. You put me off. So if we get this type of action, you'd be looking towards that stock. So it's worth just going through, just continue to go through your screens, what do you call them? Your filters, looking for those stocks that could be potentially setting up, and then just going from there. On the downside is probably what we'll chat about now. So With regards to hedging, I don't know who's got CFDs accounts. You've got a full stock portfolio. Have you got access to options to be able to hedge? Do you have access to um, can you trade indices or can you trade the CFDs on your individual stocks? Even crypto at the moment is a bit of a hedge. Um, any sort of downside movement, what we're seeing, which is interesting, it's playing out that way. Downside movement, when we saw the equities sell off quite hard, people started flowing into to crypto, and you're watching it now as we're starting to get that bit of a bounce into the markets. The US, we get that bit of a grind back up. Crypto's coming off, Bitcoin's coming off, Ethereum, we've got our eye on too, coming back off, which is great. I mean, if that starts to coincide um, with the equities as a hedge, it's worth looking at crypto. If they do start to set up getting some trades on your Bitcoin, let's just have a quick look. So our view, it's not all of ours, but view, this is Ethereum. This is on a daily chart. Longer term, I think this is a nice little buy zone. It's just, if this has been the trend down, it's really cleaned out a few of these late longs, cleaned them out with that move down. It's starting to find some buying support. You can see it's been buyers pick it up here, broken that downtrend. If we have, I mean, maybe it's going to be a longer term grind up, then big move down. We just have to wait and see. But I think if we can just start to hold these levels around the 200, above 200 to 210, 215, 220, start holding some higher lows and get that, like people call it a cup and handle, that sort of price action. Let me just draw it. Oh no, don't worry, I can't find. Let me just do this actually. Paul's going to love it. I'll draw more. If we can get, there we go, this kind of price action. Well, I'll draw it here. Start to pop up, and then what we're seeing is maybe some high lows forming. I would be inclined to start to look for a buy entry. Well, we are anyway. But the longer it takes, the longer it holds some higher levels, some minor higher lows, I think we're going to start to get that squeeze on the sellers and a squeeze up, because it's a good zone. You can see the stochastics, it's gone from sort of overbought up here to oversold down here, but it's holding higher levels. We sort of hover around this oversold market, start to hold higher levels. And in fact, coincides with what's happening on the equity market, where potential equity market starting to look heavy. It could be a good hedge, a way to hedge anyway. Also, we've got Bitcoin here. We're looking at Bitcoin. Expect this to grind a bit higher. I was thinking if it can hold up at 11.0, we'll say just above 11,000, and start to hold some higher levels off here. You want to see a bit of time go past as well, maybe a few weeks, and if it starts to hold up there as the equity market's grinding higher, it's a good sign that it's like gold. Gold seemed to have preempted. We got gold moving up when the market was moving down, and then the market bounced, gold would move down. Then it started dislocating. You started getting gold not moving down when the US was moving back up again. But the sell-offs, you start to see gold rallying. So it's getting this buying interest come in. Now maybe we get Bitcoin hold up at this level when we get in the market starting to rally again in the equities. But then when the equities sell off, to see what actually Bitcoin can do, and see if we can get some sort of buying opportunity set up. We're going to be looking at that one. So whether or not you can trade that. Now, other ways you can hedging. I don't know if you've got access to trading some options. You've got equity options. You can start to hedge. The best thing I would say, it's harder to hedge. Well, I would think it's harder to hedge individual stocks. Not so much hedging as such. It depends what your view is. I mean, we know Paul's got a few, so he might think, well, if I think this market's going to go down, what am I going to do? Am I going to try to hedge some of those individual positions, or just take out a short position, take out an index short position, just to see if it does start to head south a bit and start to pick up pace? I want to take some money on the downside when it's moving down, because you know that the rest of the portfolio could be coming under some pressure, especially if it's a fear-driven sell-off. You're going to most stocks will come under pressure, and we saw that with this original sell-off anyway. If you haven't got any positions at all, like us, we don't have any at the moment for the alerts, which is fine. But if the market starts heading south, I'm not talking about hedging now, it's just a straight out short position. And it'd be on the index more than likely. We're looking at the index So that's why I've got my eye on this one. If we can start to show some bit of a grind up, we start to come in, look like the market's getting heavy again, look for an opportunity to short the index. Or you could short it with buying some puts. I don't know if many people know much about the options. Bought puts, wouldn't suggest the same thing as selling calls, but I wouldn't suggest to do that because there's quite high risk on selling options in general. But buying some puts, letting it play out a bit, you might find that the problem is once the volatility kicks up, the price of the option can kick up as well. So I find that a tougher way to short, but the good thing is you don't get squeezed out, you don't get stopped out. You only get stopped out when it either expires worthless or you close it out on options. So there's good points. I would just take a straight out directional play using the CFDs, so you know where your risk is on the upside, where you're going to buy on stop. You know where your entry's going to be, and all that sort of stuff. And then if it goes down, you might pop back up. You could get stopped out. If you get stopped out, you're probably going to be wrong, and that's happy. Happy to take that on the chin. And then if you're wrong on the downside, then it's a good thing for the upside, isn't it? So yeah, the people who have CFDs accounts, do you have access to indices or options, or if we are looking to the downside, how would you anticipate hitting it up, or how would you anticipate potentially hedging your portfolios? What are we looking at? I think it's a good. I mean, bearish or not, it's probably a good thing to think about now. If we don't have to worry about it, that's fine too. Who cares? If we don't have to worry about it, it means the market's playing out okay, and we're starting to hold that high low, and we're starting to grind our way back up towards the all-time highs and push through potentially 6,900 on the index. They've worked out their issues in the US. Maybe the US could easily just roll over slowly and we just hold our highs, and when we bounce because we're not that bad, but we'll have to wait and see. But if we don't have to worry about hedging, that's fine. You don't have to worry. Then you just stick to your buying your stocks. You're buying your high probability setups, and away you go. But the thing is, I think we have to be preemptive, plan ahead. We're not going to be reactive. If the market rolls over and try to chase our tail, what are we going to do? What are we going to do? We've got to know exactly now what we want to do if this market rolls over. If it starts popping up, great. So yeah, Helen, I know you'd probably be trading your indices for your CFDs. Worth just plugging through the options, how to do it. Having a look at if you've only got access to your options through calls and puts, whether it's on the index, you can do your SPY options, you can do index options. I know people have interactive brokers, they trade index options as well. Look at what your puts are. Take note of the prices of what strikes you've got. Obviously, the higher you get to the current market, the more you're paying out on your insurance, essentially, to your downside. So timing is going to be a big thing too. Just getting a bit of timing, and you want more if you're going to start to look at hedging. Wait till this market gets a bit heavy. Don't just buy some puts now. I mean, two things can happen. You just go straight back up, or it could just come down and start to take a few weeks. Like what happened in September, it took a few weeks. So if you're hedging at the start because you're a raging bear, you probably went through quite a bit of premium. You've lost quite a bit of premium you've had to pay out for the insurance before it's actually kicked off, before you were right. So that's why it's important to know what the overall market's doing, what the macro environment is in the US and Europe and Australia, what our index is doing in response to the moves down and in response to the moves up, and then building your picture from there. Right, cool. Let's probably start a bit of a rant there. It's put in some share codes if you want something you want to look at, and then we'll go through that. At the moment, what do we got? There's been a couple. I'll just go through on the topic of hedging, just through a few that I'm looking at potentially on the short side. This is a little Goldie, which Echo Resources, which I think is, I know Laurent was looking at that. If we get some sort of little pullback around 21 or so and gold continues to hold, there's another thing with gold, don't forget. I mean, you got to remember the way, I guess, market dynamics, and this is the way I would view markets and the way I do view markets. Right or wrong, it's kept me out of trouble for a while. Sometimes it keeps you out of trouble, but it can potentially keep you out of some good moves too. But you can't lose if you can lose if you're not in the market, but you can also not lose when you're out. Where was I going with this? Oh, gold. So the way I'm viewing markets, when it's basically when the taxi driver's talking about it, and I think everyone's heard about it, taxi drivers talking about something gold, whatever it is, and generally the next hot thing, it's time, if you're in, it's time basically to get out because you've got to remember the markets are made up of participants. How many participants? Okay, so if we just keep it on a small scale, we're looking at, say, 100 traders are willing to buy gold. You've got to try to assess now, if everyone knows about it, it's in a bull run, it has been for a while, it's been just kicking higher. How many more people of those 100 are left on the sidelines that are wanting to get in? So you've got to remember that if it's 50-50, if you could judge that, okay, we've only used 50% of that fuel to push the market higher, another 50%, great, we could go up another $100. Great, jump into gold. But if you can look at it and think, well, the outcome is, it's already known, it's well and truly known. Everyone's talking about gold, the gold run, the next big bull gold run. Everything, again, this is what we said about negative news. Everything you read about gold, where it's going to, the bulls are coming out in force, talking up gold. They might have been doing that for the last 10 years. You don't know unless you research them. But everyone's a gold legend at the moment. If they're putting out news, they've been calling it for a long time, and they're calling prices up at 16, 17, $1,800 an ounce, where it's trading what we're hovering around that 1,500 an ounce at the moment. But the thing is, the markets are only going to be pushed by buyers and sellers. If there's not enough buyers to keep pushing that price higher, and it starts stagnating, and it's not really kicking up on the pullbacks, say in equities, the equities pull back and gold's not really going with it, it's probably a sign where maybe there's time for some heat to come out of that market. And I think the move down is going to be more severe than the move up in gold because everyone's positioned long. So there is that risk that it could come off quite quick, and then you get our gold stocks will probably come up. There'll be people rushing to lock in some gains if we have a 20 buck pullback on gold. I'm not saying that's going to happen, but I'm just saying that's what the risk is when things get a bit overextended. In saying all that, I think you'd be going for gold if you've got some gold positions. Great, awesome, and they are still SLR's having problems. Look at that, that's come off and it hasn't really kicked up with gold rally lately. It seems to be chopping around here. Who else got? You got Newcrest, haven't you, Paul? I think that's going higher. There's nothing to worry about that. You'd be obviously looking to see where you put your stop. If you're running stops, it's extended. It's coming into a 40 buck zone. So it's just that sort of thing to take note. There's a lot of heat. Everyone's positioned long pretty much. If you're selling this, if you're selling this up here, you've probably tried it a few times thinking it's overextended. So you're trying to guess the market. You're not trading, you're guessing. So seller, they'll just keep getting squeezed out of the market. Sooner or later they give up. There's no more buyers left. So what's left? People wanting to take profit. That's what could happen. So just be wary of that if you are long everything, especially on gold, sorry. GOR, is that another good one? That's kicked up, going strong. Again, extended. So just be wary of that. Yeah, I was just looking at EAR. I think that was one. There was another little goldie, but they're explorers. They're not producers. So it's probably best in times like this, in fiat, you're not going. You want to be in producers of gold because gold's going up. They've got a resource, even if it's a JORC resource, you know what the value of that's going to be. The value it's going up as gold prices go up. But yeah, if you're getting explorers, they're still going to be digging holes, and I think a lot of people will drift away from those to go into the producers. But then again, when the market's hot and people are making money on gold and you've been loading on gold, you tend to start to take profits and book it into the little ones because you're taking a punt on the little ones because you've got a lot of room to move. So yeah, they could continue to get a run on. What was I talking about? So we've got some stocks chucking in there. Who is first off the ranks? Gino ALK. That looks good. Look at that squeeze. I like, let's just go to the weekly. ALK. What are they? I haven't. Isn't gold? Oh, gold, another rare earth. Ooh, double whammy. Rare earth could be doing well if China start fighting back with the US. And gold, obviously. Dubbo project. That on the weekly, that looks great. I mean, great. Look at the volume come in on this most recent push up. Just sticking that up. Good volume come in. It's had a pullback. Just pulled back to the MAs on the weekly. Weekly trend is definitely up. This is the average price. Don't forget, average price kicking higher. So it just shows you on the first sort of pullback, it's getting soaked up around that 37.5 mark. If it can keep getting soaked up down here, I wouldn't mind seeing from here a little pullback. If it gets soaked up around 40, 41, 42 and start to look to lift again, yeah, it's worth a buy. And you can see last green day, was it Friday, good volume. So when you get that extension higher, that good push higher with a bit of increased volume, just showing that no one's standing in the way of sellers. Sellers not standing in the way. They're not trying to knock it down. They're happy to let it run before they take profit because they're positive on it. And it's generally holders into it. You're not getting any short sellers jumping in the price action like that. I do like that. I think it's a cracker. If this, it's all about the next couple of days on this one. You can see that lower highs have been held. The anchor to the uptrend. Let's just draw this up. I think it's important to know when anchors are going to get, if anchors are broken, if they're not broken. Does everyone understand what I'm talking about when I'm talking about the anchors to a trend? So if this is the trend up, this is your major leg up. I view anchors as, basically your pullbacks in that trend without being broken. This had a bit of a pullback. That was a couple of green days pullback. So you're looking at this leg up, you're looking at this leg up, that's your pullback, you're looking at this leg up, pretty much consolidated in the first bit. But that was your anchor. So the anchor, if you just project that across, even if you're coming with these lower highs coming into play, it didn't break the anchor. So that's a good little squeeze. What that's going to do without breaking the anchor, it's longer term, people are still bullish in that, willing to hold it and soak up these sort of pullbacks above the anchor. As soon as it breaks the anchor, it sort of changes the dynamics. It changes, especially if you're trading it technically. Most people start to look for a deeper correction or more of a complex correction, and that turns around of this leg up. But when it doesn't break the anchor, you're looking for this continuation. It's a good sign of strength too. So you get these lower highs come into play, but it hasn't broken the anchor, which is down here. Then it's starting to lift again. So that's good. You can see that contraction down and starting to lift. Minor high low here at about 38. But yeah, I think all signs on this one is good. So I will going to keep an eye on that. I don't know if I've had it or not. 218 mil. What's the volume like? Ticking away. They're ticking away into the offer too. So there's a big offer there at about, was it 45, 45 and a half. So they might be trying to cap that push higher. They don't want it to get out of hand. They tend to whack these big offers in there. If anyone noticed that, whack these big offers in there just to try to slow down. If it's got momentum on the upside, they're trying to they could be trying to build a position, anything. Or there could be signs of potential capital raising. You've got to be careful of that too. Capital raising coming in, and they don't want it to get out of hand too much. So you just look at that. I mean, if you're looking at volume, look at the bids and the offers, all these sorts of little things help you out. So yeah, that looks good. Nice work, Gino. The weekly, I think the weekly, if you look at that and probably a biggest perspective, that's 20 to 47. What's it? 27 cents. 40, 67, 60, what's that? 63, 4. So it's going to take you right up to these highs if that's your secondary leg higher. So first leg, if this is the base for the next leg up and it's correcting and it holds above 37, potentially that secondary leg is going to take you up into the highs around 62, 65, or above 60 anyway. Really project, or it could just completely blast through it. If you go back to bigger perspective, let me just take that off. This biggest perspective, this could easily launch through 60 cents, 67 cents, whatever it is, above 65. Could easily launch through there and just kick off. That looks great. On the weekly, you can see sellers have been in here and they've just been chopping around a little bit of a pop up. And the way that come down, after a couple of, if you were watching this at that stage back in 2016, got ahead of the MAs, come down hard. So that's a lot different to this move sideways. So that's a great sign of strength. If you consolidate sideways and you consolidate towards the highs, a lot different to something just continually sold off. A couple of weeks here, red candles, and then the third week, bang, it just got smashed. That's not a good sign. You can see then the sellers kept coming in. There's more selling to go. Come back down, retest the lows, grind around, start to lift again. at this end. So this is different dynamics to what we've seen on pops. So really worth keeping an eye on that one. Jane, PPS, premium. Use me. Now, don't like this too much, but it's worth just touching on that weekly first. I don't like, honestly, I don't like the way it's come off here so hard from the highs back in October. So when the market sold off, that sold off into December. When the market turned around and head higher, it kept selling off. So it's just whether or not what the business, I think they're doing quite well. I think the business model is good. They're still putting on funds under management, which, more funds under management, more earnings, all that sort of things adds to the fundamentals. So whether or not it's undervalued at these prices or not, great. If it is, we want to see it start to lift off that level. I just don't like the way it's come down. And then around here, a couple of weeks, bang, it started to go back up again. So then again, this roll over here and the way it's bounced. Oh, I missed a bit of data at the start, didn't I? The way it's bounced, that's a good little clean out. So this could easily just grind higher, and I don't mind, just looking at that weekly, that's a good high low. Doesn't matter if it's just in 1 week, it has taken out some levels. So if it's taken out a lot of the weak hands. If buyers that have bought it off this low, or say around that 45 cents, they're going to be under pressure. Prices were going against them. They were in negative territory, returns at some stage. So it's a deep enough correction to clean out a few people of this leg. Anyone who's been holding it from here, you're probably just going to forget about it and just keep holding it, hoping for the best. So if we just draw this up, you've got sort of levels through here. It's reacted off. Now, there's nothing to say, look at overbought to oversold. Last time it was oversold was way up here. Didn't even get overbought, it was way up here. Overbought was a lot higher. So now we've pushed all the way back up. So it's some fairly good buying action, but it's going to run out of steam. It's met with some heavy selling action up here, because if it can't get higher, the higher it gets, the less sellers are in the way of price action moving higher, if you can look at it that way. So by the time it gets sort of the overbought territory and it's kicked off quite hard, it just means that there's less sellers standing in the way. But if it can't get that high to previous highs, say, not a great example here, but just say previous highs, last time it was overbought, there's some sellers in the way. There's still potentially some sellers that want out, a little pop. They see in this type of action, they're looking at the global market, global economy, all that sort of stuff. They get nervous. They just go, oh, that's it. I've had this for long enough. I've had it for a year. I'm getting out. That could be the reason why we're getting up here. So ideally, you would like to see, I would potentially just like to see it sort of pull back. I want to see it do some work and build some higher lows. Even though this has been a good clean out, it may not be a high liquidity clean out. It's a good volume in here. But yeah, I'll just be concerned that it's getting up to sort of that 55 market and it's looking a bit stretched on the weekly. So if you go into the daily, we might start to run in a bit of pressure up to 55. You don't know. If you're long that, I would be having my risk below 40 potentially. On the daily, I would like a little pullback. If we build a high low on the daily, then I would expect it to push up through 55. So yeah, but keep an eye on this one, Jane. You've got a position on this? Are you looking at it, or it's just something you've got an eye on? The good thing is that it came off quite hard here. It did bounce off the MAs, but it also went through the MAs. It's making sense. Normally, you want to see this type of action when on a pullback, whether it's a good pullback from highs or it's just consolidation sideways, it's above the MAs. You generally want to see, if you're buying, above the MAs. With a bit of volume coming in too, it just means that, okay, we'll probably still haven't finished the move up. Okay, so you just, excuse me, I could just sneeze in a second. Hopefully not. So when you're seeing that type of action, to me, it's just suggesting that you've got more upside to come, and then you don't know how. That's why you're trying to look at the daily charts compared to the weekly charts and all the overall action to see where you could be heading to. When the weekly's up and you've just had this minor pullback in the weekly, and you're buying off the daily chart on the rise as well off the MAs, then you've got some good supporting price action for a lot higher levels. But the weekly, we're getting overcooked up here. So to me, I'm looking at that weekly thinking, how much more can we go higher? And that was quite a deep correction too. So, okay, I've got to take that into account rather than sitting on the MAs like we did before and pushing up. And on this one, you could have said, okay, say I just bought it in that green day there, broke of that previous green action, green candle after a couple of days. It's worth buying there. My risk is just below, off the MAs. I'm looking for that move up off the MAs. Don't know where it's going to. Started getting a couple of red candles up here. Green candle, red candle, could have bailed. A small gain on that one. Got a good sell-off. Doing the same thing here. Starting to see where it goes to, but just realizing that potentially up towards 55 it's going to struggle a tad, maybe struggle. Good volume through today, and it's really just up one. What are we up 1 cent at the moment? So yeah, that's all you're ever trying to do is judge: are the dynamics the same? Are they changing? On this pullback, the dynamics have changed. Had a decent sell-off. It is this a reactive move back up, or was that sell-off overcooked on the back of fear? What was the news? Preliminary final report. Yeah, so I still don't mind. Fundamentals of premium's not too bad. So we'll keep an eye on that one for. Just remind us how it goes then, Jane. PPS on that. Oh, all right, see. Yeah, Linus, don't mind this at all. I think it's a bit overcooked up here. Doesn't mean it just can't keep going. That weekly is quite bullish. I just think, just by looking at that weekly price action, we're sort of, the way I'm viewing this one, so I'm viewing this as that was your leg up, that was your contractive action, a leg up there. So good, solid leg up. This is contractive action. You took out a few little levels through here, cleaned them out. So on that move down, held up just below around 160. So that was contractive. We're going into expansion now. So in expansion, you want to see it sit on the MAs. You don't want to see this, push up, push right back below the MAs and push back up. That's just too choppy for me. You want to see bullish action. You want to see you're not the only one thinking it's going up. When it sits on top of the MAs like that, here as well, it's quite bullish. So it's just whether or not being extended on the daily. It's a bit extended on the weeklies. If you go back to the daily, are we extended up here? If we extended, you sort of go, well, I don't really want to buy it here. I'm happy to wait and see what happens if it bounces off the MAs, because it hasn't really bounced off the MAs. We're in contractive action on the weekly. We just lifted off the MAs on the weekly. So on the daily, this is the lift off the MAs down to 250. On the daily, if you wouldn't mind seeing it push to 280 or so and start to lift there and get a bit of volume, bit of heat come out of that, bit of selling pressure coming in, getting soaked up at higher levels from the buying action. That's going from, say, oversold, overbought to 50%. It doesn't have to go right to oversold again, but a bit of a pullback and see it start to rise, potentially like, can't find it like this, start to rise again. Just not the greatest examples, but then hover around that overbought territory as it's grinding higher. So that's what I'd be looking for to be a buyer on this. I don't like buying up here, because for me, buying at 289, for instance, my risk has to be below 250. Probably percentage terms not too bad, but I would rather, just by seeing this, because this is not great. Pull back, pop up, lower high, reconfirm lows, up, taking out the high, that lower high. Doesn't mean it can't just wash out, straight back down through the lows at 250. And this is going to be a bit sentiment. I think this was driven higher by talk of China imposing tariffs on rare earths and making, obviously, rare earth prices going up. Australian Linus did quite well on the back of that. So if we get that sort of action play out again, the threats of that action, that's all you need. You don't need it to play out. You just need the threats of it. China tariffing rare earths to the US to potentially Linus kicking off again. I think that's what's happening. It's not, selling hasn't come out and drive it low. That fear's not there. As long as the China-US trade war is on, and potentially looking to escalate. Escalating means that China have got to do something, means this is probably going to be a beneficiary. It's just whether or not we just drive straight up from here, or we get something chop around here for a couple of days. I don't care if it just chops around here. Up, down, up, down, up, down. Then we've got a clear place to put our risk and entry point. We'll just have to wait and see. That's a goodie. What was the other one? WAF. I just typed that into the chat. That's a bit weird. I like this. I think we're getting a bit overcooked up here. We're into the highs, quite clear around that 45 cent mark. So you're only looking at resistance points to see. I mean, you're trying to figure out those levels to see if we're going to get a reaction off that zone. So if you're buying it, let me just get rid of that. I'll draw that chart up. You know, longer term, if you've got, so if at this stage, if you're just looking to buy it in here, you bought it in here, you bought it in here, wherever it was, you had your premise for buying it. The first thing you'd be looking to see what's going to happen, potentially what's going to happen, you've got to take into account zones. You've got to take into account previous selling zones. So at that stage, you know, when you say you bought it, say this was our entry, okay, cracker, actually real cracker of an entry. You've got every reason to buy that. Double bottom there, you're looking for your high low, that starts to confirm. Say you just bought it on the break there, you bought it on a couple of green candles. Good price action. It was a bit extended there, but hey, your risk is down at 20 cents. So you bought it at 30 cents. That's a big risk. That's a bit of a problem, but just say that's the way you were viewing it. Started to lift. The first thing you do once you buy it there, where am I going to potentially come into some selling pressure? Your first port of call is, you know, it's not far off, say 33 cents. It blasts straight through there, so you can sort of forget about that. It's blasted straight through there. Next day, am I on a weekly chart here? I'm on a weekly chart. Oh, sorry about that. Let's just take it from the weekly. Just forget about what chart we're on. So at say 33, entry was around 30 cents. You got a 3 cents up before you're potentially going to come into some selling pressure. You've got to just look at that and you just view it. You can get into the daily chart if you're on the weekly. But if this was a daily chart, you're looking at the action. Okay, it blasts straight through. It finishes there. Oh, what am I going to do? Next day, opens, heads higher, closes on its highs. Okay, you can probably forget about that level. What's the next level? There was a bit of selling pressure, and you can see that the way it's reacting a bit higher at 37.5. And then you started, because all you're looking for is a zone. There's different levels of buyers, short term, medium term, longer term. Longer term probably wouldn't even bother looking at it. Okay, but shorter term would be, you know, they've got small risk reward. They've added a bit more risk. Percent returns quite healthy by the time they get up to 37.5. You just want to see what's going to happen. There was reaction lower, got bought up. Another reaction once it popped through. You get that red candle just here, reaction lower. Tried to get up, it's reacting. You know, got these minor daily lower highs, red candle, and then we got this bit of a sell-off. Okay, so it did react off that zone. It got down to around 30, retested your breakout zone, and then bang, straight back up. So that's great. But you're still looking at zones of where you could get some sort of reaction, and you're just marking them out because that's what you're going to be doing. And then it's up to you to decide, do I take some off? Do I just keep it? And longer term, you know, I've got my entry here. This is your first pullback. Technically on your weekly, I've got my risk here. It starts to lift. I'm just going to raise my risk to here. All of a sudden, once it gets up through these highs on this green candle, if you can see this green candle just in here, then I could raise my risk. I'm about break even then. And then you were just assessing what happens at the next level. And of course, we got this failure here. Well, we'll just take that. So we got failure here again, and it started to sell off. So that was, it popped down and rejected. Take note of when it rejects. If it can't finish above a level, not a good sign. And then you're going to get, you know, your first time up here, your second time up here. What happens is more people, if you bought it here and you've ridden through this and you're starting to get this reaction lower again, more people are going to start to think of selling. And should I be looking in some gains? So that it just starts to go from bullishness, a few bears starting to creep in slowly bit by bit. And that's how markets move. They react off a zone. It's how many bears are going to come in to drive it lower. If there's more bears than bulls, then it's going to be a downtrend, start of a downtrend. If it's not, it could be soaked up on the way down. And that's all you're really looking to assess. And of course, well, you can see what happens there. Got smacked down there. So on this rally, what you're really trying to do is just assess, is this going to continue on? You know, so once we got up here, I think right now we're up at that zone again, where we know it's reacted there before. If it starts to react again, this could be a deep move. It could be, not game over, but potentially it is rallying on the weekly. We're right up into a zone now. So if you were looking to buy it here, I'd be tentative of that, of course. I mean, that's just me. I wouldn't potentially go near that. I think it's well and truly extended away from the movement, from the average, essentially. Good volume, but volume straight into a sell zone, potentially a sell zone. So we just want to see what the daily is saying to us. If we start getting some sort of reaction, potentially today is the first reaction. Who knows? It's even extended away from the daily, so I wouldn't buy it here. I'll be looking for a pullback, or just I'll probably be missing out if that's the case. But yeah, I think I'll be keeping it is trending on the daily. I want to see a pullback. If the first pullback and you start to sit on the MAs again, we start doing some work like we've done before, yeah, worth a buy because you know where your risk is. You know that this time it could drive up into that 45 zone and go straight through. If it doesn't, then you just start to assess it again as you go. So that's it. And we'll just finish with DCN then. Hope that makes sense. DCN, yeah, I mean, it's going up. That's great. It's got the back of gold. It could be closing that gap, 150. I think as a golder, you've probably got better stuff to look at. That's, driven down, big week down, big volume. It's cleaned out a lot of people. There's volume coming back in, but is that enough? We could be extended up at 150, and anyone that didn't sell it up here, it doesn't matter what gold's doing, they're still sitting in a loss. If they're sitting in a loss and we start to, find some selling up at that 150, you've got the touchdown here, a touch here before it gapped down and got smashed. If you were watching that and you were holding from above 150 and it starts to stall, you're either just going to forget about it and hope for the best, which is not trading, or you're going to potentially look at getting out and taking, licking your wounds, taking your losses and just watching it. So there potentially is what you say, some liquidity in selling, some selling liquidity you're running into. Who knows? We don't know that until we start seeing some sort of reaction. At the moment today, no reaction lower. It's quite strong. 5 million shares, probably average volume with the last few days, heading higher. So the higher it goes, I think the more likelihood if you bought it down here, you're going to start to see some selling inching in. It's pretty much gone down, straight back up. So it's that V-shaped recovery. I wouldn't, like I said, I just wouldn't go near DCN just at this stage. I think if you're looking for a bargain hunting, that should have been done back in June, July. Now, I don't think it's bargain hunting. I think you potentially get into some sort of liquidity, selling liquidity running into. So the upside, I don't think, especially stretched, your risk is going to be below 80. Buying it around 130, risk reward's not too crash hot on that. You just have to wait and see if we can get a bit of a pullback. What happens on the pullback? Buying starts to soak up. You want to be buying early with small risk, not wait until it's kicked up to buy with bigger risk and less potential on the upside. All right, I hope that makes sense. So yeah. All right, guys, probably call it a day there. I hope that you enjoyed that. If you did, great for you to leave a like at the end of on the YouTube channel. Give us a like, give us a thumbs up, whatever they say. I'm starting to learn all that jargon. Yeah, it'd be interesting to see what happens over the next few days. We're down 10 at the moment, so we're just starting to reject. If anyone looks at the SPY, so I was marking up earlier. I was looking for this pop up into that resistance zone at around 65.17. We got that, so there's the buy zones I was looking at. Bought it up into that. Didn't take all that though, but then you started getting weakness. So definitely weakness in there. Good correction. The second pop, it's selling at a lower level, slightly lower level, lower high. So to me, I was hoping we could get some strength into the close. If it can't hold up here and chop around, we grind up into the close, then this could get just sell down to the close. Pretty much end up neutral for the day, but we'll have to wait and see. Yeah, if anyone doesn't know, this is worthwhile getting the habit of doing that. So these are the entries I've been looking at trading, and I'll just mark that up, put it in a file for later reference. It's worth keeping an eye on that. getting into the habit anyway. I know Lauren and I were talking about these. This is what we're talking about, Lauren, by the way. Little entries. So yeah. All right, guys. Thanks very much for joining us. We'll see you back in on what is it, Monday again at 12:30, and we'll see how these markets go over this week. Hopefully, the volatility can stay out for a while, but we'll just assess it day by day. All right, guys. Enjoy the next few days. Enjoy your weekend, and keep out of trouble. Cheers, guys. Bye.